Hi, welcome to Neppy Invest, an Appendix 4C. So if you've been following my channel for a while, you'll have noticed in October, November, I did a plethora of videos looking at companies' Appendix 4Cs. In fact, and some days I did 2 videos per day just looking at a company's Appendix 4C. So what is an Appendix 4C? So let's get stuck into that question. An Appendix 4C is simply a quarterly cash flow report, and in my opinion, cash is king. So when I look at any sort of yearly report, half-yearly report, the first thing I always go to is the cash flow report. And a quarterly cash flow report is something that has to be issued by specific companies every quarter. So the yearly and half-yearly report only issued every 6 months, and the requirement of the ASX is that most companies on the ASX only have to release a report on how they're doing every half year. But there are some companies that have to issue a cash flow report every 3 months or every quarter. And typically those quarters are, the release of the Appendix 4Cs are released at January, April, July, October, or the month after the end of the quarter. Typically, and this is just typically, the release of the Appendix 4C is towards the end of the month. So for some reason, most companies want to wait to the last minute. I'm not sure, you could say they're procrastinators. Maybe there's a lot of time and effort being put into these Appendix 4Cs, but typically they wait to the last day of trading on the month and release it all at once, which is a bit annoying for someone like me who loves to go through every single Appendix 4C. I love to see that all the companies space it out over the month. But it's my favorite time of year. I love January, April, July, and October simply because that's when we see the Appendix 4Cs being released. Also like February and August because that's when yearlies and half-yearlies are reported by most ASX companies, not all. So I really like a reporting season, and in my opinion, Appendix 4Cs is the best report. So what companies have to issue an Appendix 4C? So I actually went through to see if I could find some specific rules, and there were no specific rules. It seems like ASX just arbitrarily decides which companies have to issue an Appendix 4C. But there are some, not hidden rules, but there are some obvious hints to understand what companies ASX are going to decide have to issue the Appendix 4C or not. So you never see any companies like CSL, the banks, any profitable companies have to issue Appendix 4C. The ASX also decides how long a company has to issue an Appendix 4C, so it could be years and years, and you'll see that in a second. Or under the case of A and B on the left, it seems like they only have to issue an Appendix 4C for 8 quarters. But when you break it down, it seems like small cap negative cash flow generating companies have to issue an Appendix 4C. And that sort of makes sense when you think about it, because the whole purpose of companies issuing an Appendix 4C is this reason here. It allows the investor or me to assess the company's progress in achieving profitability or cash flow positiveness. Now, you could say you can see that progress every half year on the yearly or half-yearly report, but this gives us a better idea over a shorter time period. And I like to see companies report every quarter, or these sort of companies report every quarter, because I think a 6-year or 6-month reporting schedule for these companies is a little bit too long. We can see big changes in the company's performance over a shorter period of time. So I like the fact they have to report every quarter on their quarterly cash flow report. It gives us a better idea how the company is doing. And it fits in line with how the Americans report. They report all their companies every quarter. And there are some arguments pro and against that, but I think we've got it right. I think the large companies only have to report every half year, but the smaller negative cash flow companies have to report every quarter. I like the way we do it. So how is the Appendix 4C set out? So there are 4 main sections. So this is my definitions of main sections. And the first section is cash flows from operating activities. And this is the main section that I'm really focused on when I look at an Appendix 4C. So if I had no choice, would be the only section I would look at. So This is simply what the company earns and spends in the normal course of its operation. So there's two things I look at here, and that's receipts and the operating cash flow, and to see whether that's negative or positive. Now, you have to understand here that receipts is not equal to revenue. Some people think it's the same, but it's not really, and that's all because of timing. Now, I like to see trends here. So the thing I really like to see is cash receipts increasing or growing, and also like to see operating cash flow becoming, if it's negative, becoming or heading towards becoming positive, or if it is positive, moving higher and higher with time. So you need to know the history of the cash flows from operating activities, and that's what I do. That's one of the things I do. Anyway, the second main section is cash flows from investing activities. So included in this is capital expenditure, so that's property, plant and equipment, acquisitions or sale of businesses or disposals, what they call that. The third section is cash flows from financing activities. So this could be borrowings they've made, capital raisings will go here, dividends paid, and more than likely a company who is issuing Appendix 4C will not be paying dividends, and even something like if investors have exercised some options, that money will go into this section as well. And then the fourth and last section of the main sections is what's been happening to the cash of the business. So what they start out is at the start of the period, they've got a cash balance, and then they add up all these cash flows from operating, investing, and financing, add those all together, and then we end up with an end of period cash balance. Now, there are 4 other minor sections, so I won't talk about these a lot, especially the first two. So the fifth section in the Appendix 4C is a reconciliation of cash and cash equivalents. That's sort of breaking down where the cash is being held in a bank, or if there's term deposits, that sort of thing. The sixth one is payments to related parties of the entity and the associates. So that's sort of if the business has lent out to one of the directors. So I really gloss over those two fairly quickly, don't really look at them. The seventh one I do have a good look at, especially if a company has borrowed some money, and that is the financing facility. So if they've borrowed money, what's the interest rates on it? So you would be surprised how high some of the interest rates on borrowings are. And when I do an example, I'll show you that. And then the last one is an estimated cash available for future operating activities. So in this section, what they do is they look at the cash flow from operating activities in this period, and they assume that sort of cash flow is going to continue in the future. And based off the cash on hand, how long can the business survive with that cash flow they've experienced in this quarter? And that's given based on the assumption that they do no capital raisings, they don't do any more borrowing, how long can they last? And if they've only got cash on hand less than 2 quarters, they have to answer some questions. And I'll get into those questions when I go through an example. So here I am at the Commsec platform. I'm going to show you how I'll search for Appendix 4Cs. So I'm at the home page here. Now, I don't trade through Commsec. I still use that platform just because I'm used to that platform. And I also like to go through that platform when I'm searching or looking for announcements. So this is how you do it. So you go to Quotes and Research, go to Tools, and they'll bring up an individual company, which is Ecofiber for some reason. Now, if you go to these company announcements, that will bring up all the announcements on a daily basis released by Ecofiber. So I don't want to see Ecofiber's announcements. So I want to look at all companies' announcements. So if you get rid of the ticker code, press go. Now it'll bring up all the announcements released by every single company on the ASX. Now, on Monday, the 28th of December, the market is an opening, so we're not seeing any positive results. So I want to go back to October, the last Appendix 4C season, and show you some examples. So if I go to the monthly view here and go back, click on the back button 2 times, go to October 2020, go back to the daily, and we can see all the announcements released on the last week of October. You can see the last trading day, which was the 30th of October, we had 1,487 events or announcements released that day, which is a lot. You don't want to go through all these announcements, so you can filter this through to get what you want. So first thing I usually do on any trading day is just click on market sensitive. So I'm just really interested in the market sensitive announcements. But when I'm looking for Appendix 4Cs, I go one extra step. I click on this commitments test entity quarterly reports, and that will filter it down to Appendix 4C quarterly. Now they're not all named Appendix 4C quarterlies. If I go to this Syntonic, you can see it's called Quarterly Activities and Cash Flow Report. So what they've done, if I just click on that, they've combined two announcements in one. They've got sort of an activities report, which is this what they've done in the past year. So I like to read through that for a lot of companies because it is good stuff. And then they go through the Appendix 4C. This is what we want to look at. So some companies do that. They combine two reports in one. Some other companies, I'll just show you one company I'll look at now, which is, here we go, Commsec Group. So they've actually separated those two announcements so you can easily access either one. So if you just care about the activities, what they've done in the past quarter, you can click on this September 2020 quarterly activities report. Or if you're just interested in the Appendix 4C quarterly, you can just click on that. So let's just click on Commsec Appendix 4C quarterly. And this will give you straight to what you want. So this is a quarterly cash flow report for entities subject to Listing Rule 4.7b. If you really want to check out Listing Rule 4.7b, go ahead. I have checked it out and I got nothing absolutely out of it. So good luck to you, and maybe you can leave a comment if you got something out of it. So I'll just zoom in on this. So again, the most important thing I look at is this cash flows from operating activities, particularly the receipts from customers, which is that 1.1, and then I look it down to 1.9, which is the net cash flow or outflow from operating activities. If it's in brackets, which is in this case brackets around 710, that means they are cash flow negative, and that's not good. So you want to see cash flow positive. So, and just keep in mind that, again, receipts is not equal to revenue. Now, the next section, section 2, is cash flows from investing activities. And a lot of times there's not much substance to this, not a lot of activity in this section. You can just see Commsec doesn't have much there. They did pay $418,000 for non-current assets. Who knows what that is? Then next section is the cash flows from financing activities. I'll zoom on this a little bit more. This will show you how much cash they got from any capital raisings they did through the quarter. If they had any borrowings, or they repaid borrowings in this case. So they repaid borrowings to the tune of $366,000, and they also paid interest to the tune of $131,000. So they have some debt on hand, and that debt has either a lot or there's some high interest to it. So the net cash from financing activities was positive 1.372, simply because they raised some cash. Now, the fourth section is a very important section, especially in Commsec's case, because they started the period with only $312,000 on hand. So they needed to do a capital raising. So luckily they did. And then the next thing you do is you add, or they add up all the cash flows from operating, investing, and financing activities, add those all together, and then come out with the cash at end of period, which comes out in Commsec's case, $426,000. So they don't have a lot of cash on hand, and more than likely, if they keep operating at a cash loss of $710,000 in operations, they won't have enough cash to last the next quarter. And that's definitely going to be a question ASX will ask them in the future here. So section 5 is something I really gloss over, just where the cash is held. So I usually just go through that very quickly. Section 6 is if they made any sort of loans to directors, that sort of thing. Usually I just go quickly over that, don't even really look at it. But I do look at section 7, particularly if a company has borrowings, which Commsec does. You can see you have loan facilities of $5.5 million. And what I'm really interested in here is this section down here, which I'm highlighting right now, because it shows you what the interest rate of their loans is. In this case, it's 9.5% interest rate, and it's maturing on the 24th of May 2023. And you also have the lender there if you're interested in that. But that's really interesting me because that interest rate is quite high based off what sort of interest you can get in day-to-day living. And companies like this, small cap companies like this, sometimes will raise capital to retire that sort of debt just because the interest rate is so high. You can just see the interest they paid this quarter was $131,000, and that is a fair bit for a company that is cash flow negative. And then Section 8 is, in this case, quite important because what ASX is asking here is you burn through $710,000 in cash, you only have $426,000 of cash on hand, and if we assume you're going to burn through $710,000 of cash again in the next quarter, you won't have enough cash to exist or become an ongoing concern. In fact, they say they have 0.6 quarters of funding available for the future. So they ask some questions, and these questions are 8.61, 8.62, and 8.63. So they ask the questions, does the entity expect that it will continue to have the current level of net operating cash flows? 8.62 is what sort of things are you going to do or steps you're going to do to raise funds for your operations? And the last one is 8.63 is, does the company expect to be able to continue its operations and to meet its business objectives? And that is the question I always ask when I look at these quarterly cash flow reports, because that is the ultimate question. Can the business keep on going to meet its objectives? And that is 8.63. So in this case, Commsec has answered these questions quite well. They've mentioned they have quite a bit of cash coming through, $300,000 just at the end of the quarter's end. They have $190,000 in grants, and they actually expect to be cash flow positive or near cash flow positive in the next quarter. So they have good answers there. Now, I'll go through another example. Maybe I'll do an example of a company that I'm trying to think of one company. Let's go to Dubber. A lot of people ask me about Dubber. So this is the last example. So this is one company that have combined their activities and their Appendix 4C into the one announcement. So they've gone through all their activities this year, how they're doing, annualized recurring annual revenue, or annualized recurring revenue, and at the end of the report, they get into the Appendix 4C. You can see this company also is burning through cash, $2.2 million cash flow negative. Again, not a lot of investing activities. In fact, not a lot of cash flows from financing activities. And the reason why for that is they had at the beginning of the period $18.4 million of cash on hand. And at the end of the period, they had $14.6 million of cash on hand. If you look at the Section 8, no borrowings for Section 7. Look at Section 8, based off their cash flow burn, based off the cash on hand, they have 6.5 quarters of funding available for the future. So they have no problems about ongoing concern. So you can see Section 8.6, they didn't have to answer any questions. So that's the only two examples I'll give you now. If you have any questions, leave it in the comments section. So how do I use Appendix 4C information? So I don't look at this, the numbers there, the cash receipts in isolation. I like to look at trends. So I'll just show you my spreadsheet, Excel spreadsheet, and what I look at. So this is a spreadsheet I began way back in 2013, just looking at Appendix 4Cs for all companies that issue. And the reason I decided to do that was, and this is just based off cash receipts, so this is the first thing I look at, and it's not based off being cash flow positive in operations. So this is the first thing I really look at is just cash receipts, and I just want to see a trend up. So you can see I've got 5GN here, self-wealth. And I've color-coded it, so if you see any reds here, that means the company was cash flow positive in operations for that quarter. So Self-Wealth, because they usually issue their quarterly cash flow reports first or early in the month, I've just got that at the beginning here. And you can see when they started their business in April 2017, they only had $300,000 or $37,000 in cash coming through the door in operations. And you can see how that's grown through time. In the last two quarters, it's been $4.2 and $4.4 million. And because it's red, they are cash flow positive in operations. So I have a plethora of companies here. There are a lot of companies that have to issue their quarterly cash flow reports, and you can see it through time. As you go through the end of this this report, you can just see it's companies that have just started issuing Appendix 4Cs. There we go. So a few companies here, and I'll just show you. Let's go to Dubber first because I've already shown you that. So here is Dubber. You can see the progress of Dub. Again, they first started issuing their cash flow reports or Appendix 4Cs in July 2015. Very low, 34,000. It's going very slowly at first. But then the last few quarters, it's gone from 1.6 million to 2.8 million. That's a fairly big increase in cash receipts. So they are still cash flow negative in operations, but I'd like to see how they're doing in the next quarter. So Dubber has never been cash flow positive in operations, and I'd really like to see how they're doing in the next quarter. Another company we looked at was CG1. Now I mentioned they were cash flow positive the previous quarter, July 20, and they went from cash flow positive to cash flow negative. You can see they started on the ASX at 1.7 million, and they did have a good rise. So it went from 1.7 million to 5.1 million in April 2019. Then the cash receipts are starting to go backwards. That's not something I really like to see. So that's a big red cross against CG1 or Carbonix. Let's have a look at another company, Alexium. It's a company I do own. So this has gone, Alexium has gone through a really interesting cycle. So back in October 2013, for about 2 years, not much was happening with the business. Then they went through a rapid growth in cash receipts. So they went from 369,000 in October 2015 to a peak of $6.8 million in cash receipts in July 2017. And then they went backwards, changed in management that was more concerned with margins. The previous management just wanted sales and revenue or cash receipts coming in the door. They didn't care about margins, very low margin business. New management wanted to increase the margins, which I think is the correct direction. So we saw cash receipts going from 6.8 million to a low of 782,000. Now we started to see cash receipts starting to climb again. Whether the company will be successful with that, it remains to be seen. So again, just a plethora of companies here. Bub on the left here, they got to a peak of $23.4 million of cash receipts in April 2020, and that's gone back to $9.4 million in October 2020. They were cash flow positive in operations in April 20. So a lot of information here. I usually graph this, put it in graphs for easy to look at. I usually do that in videos. But I just color code this for make it easier for myself. This is a labor of love. I wouldn't recommend everyone doing this, but it makes it easier for me because I really like Appendix 4Cs. Yeah, so that's how I look or use the information in Appendix 4Cs to look at the trend of any companies, these small cap companies, looking at cash receipt trend. And then once I go through the cash receipts, I see that trend. I look at the cash flow positiveness of the company in operations. Then I look at free cash flow to see if they're free cash flow positive. And then I look at anything like whether they have enough cash on hand and that sort of thing. So I look at a lot of things, even though I tend to focus on cash receipts initially. Once that gets a big tick, I look at other factors. And then if I get a lot of ticks, I will buy into a company. So that's all for this video, a long-winded video. Hope you've taken something away from this video about what is an Appendix 4C and how I use an Appendix 4C. So that's all for this. Again, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial wisdom or financial circumstances. Not wisdom, circumstances. That's all for this video. Bye. Have a good day. See ya.